Hello and welcome. It's time to take a look ahead at what could be driving the markets this week. I'm Kelly O'Byrne and I work on the dealing desk here at LCG, and I'm here with Jasper Lawler, who is our senior market analyst. Jasper, the UK election, what a result. It's unbelievable. So give me your thoughts.
Well, absolutely. How can we start with anything else? We knew the Conservatives had run a pretty shoddy campaign, but still everyone on the margins, the experts thought that they were still going to run away with it. Perhaps not by as much as we thought at the start of the campaign, but as it turns out, it was a complete disaster for the Conservatives, really. And so unsurprisingly, we saw the pound drop off about 200 pips overnight. So actually that fell quite nicely within our sort of forecasted range if there were a hung parliament. We were about right on the FTSE 100 as well, but that was a very limited opportunity to capture that sell-off in the FTSE 100 because it just bounced straight back. So kind of captured both sets of emotions in a way on the stock market, whereby initial fear about the uncertainty, the effect on the economy, Brexit negotiations, etc., but then immediately used as a dip buying opportunity because of obviously the benefit of the foreign earnings, the foreign exchange benefit to the multinationals on the FTSE. So Theresa May, her future's in the balance, obviously.
Yeah. She seems like she's staying on as Prime Minister. Could she quit, do you think? Or could there be a vote of no confidence? And what would that do to the pound or the FTSE?
Well, it was interesting that at one point we were expecting an announcement from Theresa May around 10 a.m. on the Friday, and the pound actually recovered on that. And then once it was announced that she was going to try and form a government, then actually the pound dropped back again. So the reaction in the market, just in that little small instance, was actually that maybe there's lost faith in her leadership ability, which is understandable after this campaign because she threw away what seemed like a pretty good opportunity to strengthen her hand here. So I suspect that if a leadership election was to be called, probably that would be a negative for the pound because it's just the uncertainty factor again. We thought we knew where we stood in the Brexit negotiations, policy for the economy, and that would just throw it all into limbo again. So I suspect that would be a negative result. I probably think that the chances of her making it through to the next election in 4 years' time is quite slim. Yeah, I think given all the uncertainty of the Brexit negotiations, all the different factors that's going to throw up, I think there's a good chance doesn't look like she wants to quit, but I think that maybe with such a slim majority, even if they join together with the DUP, it's easily possible that some of her own party don't vote with her were there to be some leadership election in the House of Commons. So, it'll be interesting. Let's see, I suppose.
And sorry, going back to the pound there, it did drop, but some clients were expecting it to drop more.
Yeah, in line with our expectations roughly, but there were calls out there for literally drop down to 120. Obviously, that's still possible. Who knows what's around the corner? Theresa May could still quit. There could be a sovereign credit downgrade. That would probably hit the pound pretty hard. That's unlikely at this stage, I would say, because Labour aren't really going to be forming a government here. They didn't have enough seats. It was a great performance relative to expectations for Labour, but they're still not the leading party. So there's no real call for them to lead a minority government. And that would be the main risk to the sovereign rating because of the increased chances of public spending. That said, maybe there's a bit more pressure for Theresa May to kind of come into the centre ground, maybe up the spending a bit. Things like the tuition fees, obviously that was a major vote winner for Jeremy Corbyn. That was a smart move. Promise free tuition, the students will come out and vote for you. Obviously, his kind of pretty hard left-wing agenda is appealing for a lot of students as well. So, I think probably this reaction in the pound is necessary. I think what's keeping us afloat in the pound at the moment is basically we don't quite know what this means for Brexit. Either, I think, as I see it, there's two choices for Theresa May on Brexit. It's one, she leans on the softer side to appeal to the opposition parties or two, she goes on the harder side in order to keep her Brexit skeptics on side in her party. So that's not really knowing what tactics she'll go for on that. And so until we get a better sense of that, I think probably these are more sensible levels for the pound. This sort of one holding above 125, I suspect.
Mm-hmm. Okay. And obviously we've got the Bank of England rate decision this week. Do you think the election result could change your outlook on that, where it would go?
You've got to imagine that this probably puts downside pressure on interest rates. Adds to the uncertainty for the economy for Brexit negotiations. That's one of the main reasons the Bank of England are expected to remain on hold for a while. It depends if the pound drops further. Obviously, that raises the prospect of higher inflation. So that may, on balance, increase the need for a rate rise. So it's kind of that question of where does the pound go to which typically lower pound, higher inflation, obviously, that hits consumer spending. So that's a negative effect on the economy, but obviously higher inflation generally dictates higher rates. So I would say that probably the result is a whole lot of nothing. The Bank of England is still just going to be sitting on the fence, and I don't expect too much from them next week. Probably the data could be more significant even than the Bank of England. Okay.
And now, enough about election for the moment, but it was called Super Thursday last week for two other reasons. The ECB and Comey's testimony.
Yeah.
What about those two?
Well, I would say probably on the global stage, they probably turned out to be more significant, because I think one thing you can take away from the election response was that global stock markets headed higher afterwards. Bond yields in the UK jumped around a bit, but not really anywhere else. Gold and the Japanese yen, typical safe havens, were down after the election result. So actually probably the Comey testimony, I think probably the takeaway from it is he had a lot of jabs at Donald Trump, obviously a bit of a personal vendetta there, but I don't think there's any real evidence that Trump interfered in the Russian investigation. Mm-hmm. And so I suspect that we're not going to see impeachment for this one. Maybe the Democrats will find another excuse down the road. I'm sure they'll be looking. But at the moment, so that puts Donald Trump's agenda back on track a little bit. And so that's generally good for the US stock market and global stock markets. And the ECB is kind of, it's basically along the lines of what we've been saying is I think they have to announce tapering at some point, but they're just being glacially slow about how they do it. So it was quite interesting, the ECB meeting last week. They basically cut out the bit of the statement that suggested they could cut rates. So that's hawkish. But they said they could extend the QE program. So that's dovish. So they did a little bit, but took away on the other end. So the net result is the euro fell off. And I suspect, given they're being so slow, so desperate to cling on to the easy policy, that maybe there's a bit of downside risk for the euro, depending on what the dollar does.
Okay. And before we wrap things up, we were discussing earlier gold and also oil being at key figures at the moment. Tell me more.
Yeah, so I think we're going to throw up a couple of charts on screen now. Oil for me is a big one because we've got this rising trend line going up through here. And the way I'm looking at this is this trend line's broken. Now you can draw it a different way. I've put that on the chart too. So we're still holding in there. Basically, if this level holds in oil for me, then we're still all right. We're still looking at kind of plus $50, standard, maybe that 50 to 60 range in oil. If it gives way, to me, that point's much lower, probably down to 40. So I think it's quite a kind of pivotal level at this point. To me, I'm erring on the suspicion that we're breaking lower, because this is such a negative reaction to OPEC, which net should be a positive for the oil market. And on gold, we basically just ran straight into that 12.95, just short of the 300 per ounce. And we dropped quite solidly for about 3 days afterwards. And so that's quite a big reaction to the downside for what was an uptrend in the short term. So it looks to me like that's maybe capping the gold run for now. So slightly less bullish on gold.
Great. Thank you, Jasper. And thank you for watching. Please don't forget to follow us on social media and where these videos and more are available. Thank you and best of luck trading.